The Nasdaq 100 continues to be range bound between 11,180 and 11,480. Now price gapped up overnight on Sunday following Friday's impressive rally on the back of this report. What's interesting here is that after they do the 75 basis points in November, they're going to debate on the size of future rate hikes. That begs the question, are they nearly done? Is November the last big rate hike? This is why the market cheered the headline, because we could well be nearing the end of the aggressive rate hikes. Now, although rates are unlikely to come down, based on what Fed officials have said in the past, rates are likely to remain at the levels they are for some time to bring inflation down, which is most likely going to hurt the economy. Now, looking at the daily chart, the gap up on Sunday saw price tag 11,480 as resistance before coming off and filling that gap on Monday. Price then hit our support level of 11,180 before bouncing sharply. These two levels at the moment are key. The high on Monday saw price hold firm at the 11,480 resistance level. On Tuesday, price tested 11,480 once again, even clipping the next level up at 11,688 as highlighted here, before price once again held the 11,480 level. Wednesday was the same, where price retested 11,480 only to close below it for a third time in a row. With disappointing earnings from Alphabet in particular, there was no impetus to push through this resistance level. Alphabet missed on earnings and reported a decline in YouTube ad revenue, which confirms ad spending and marketing budgets will be cut by companies as a recession hits. Microsoft beat on earnings but provided revenue guidance for the current quarter that missed. Remember guys, the stock market is forward looking. So it's no longer okay to simply beat on both the top and bottom line for the last quarter. Investors are more interested in forward-looking statements, which gets priced into stocks immediately. It was the same with Facebook on Thursday, which helps drag down the Nasdaq. A miss on earnings and a weak forecast, stock gets crushed. Amazon misses on earnings and provides a weak forward guidance, stock gets crushed. Right now, all traders care about is how the future looks with these megacap tech stocks. And what these companies are telling us, that the good times are over and both revenue and profit is coming down. That's what you're seeing reflected in their stock prices. This chart shows the impact of earnings on this megacap tech group. With the exception of Apple, all tech stocks were hit following their earnings. Now Netflix looks like it's outperformed, but don't forget this stock is still down 50.7% year to date. Going back to the Nasdaq 100, you can see the daily chart how 11,480 held pretty much all week, with a spike up to 11,688 on Tuesday. The fact price struggled to get over this major level resulted in a pullback on Thursday, with price remaining between 11,180 and 11,480 to finish the week. 11,180 remains key support, while downside targets to watch will be this blue dotted trend line around 10,765, which is where price held last time round on the latest inflation report. Further support is at 10,540. If we look at the weekly chart, we can see that this trend line that connects to the pandemic lows in March 20 continues to hold firm as resistance, suggesting the bears continue to remain in control despite the relief rally that we're seeing. Next week, the focus will shift towards central banks, with the Fed and the Bank of England in action. 75 basis point rate hike is expected next week, but it'll be the messaging after that will determine where markets head. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.